Get your money out now. I'm your host, Steve Van Metre, and thanks for joining me today. And just when we thought things couldn't get any worse, we're already getting word of frozen withdrawals. Another round of bank runs beginning as depositors yank their money out of fear that their money isn't good. And we've been warning people to check on where your money's at, because if it's not good, and it may not be, or if it sounds too good to be true, well, watch out. Another bank run is coming. And we've seen this over and over now. Not only have we seen major banks get hit, we've seen accounts get frozen, we've seen an exchange fail, and we have seen people lose their entire life savings and are wondering every day if they'll see any of it back. And we were told that this one institution could not fail, and now all of a sudden, here we're seeing the signs once again. Let's over to CNN, where we picked today's story up. As Binance withdrawals jumped to $3 billion in 24 hours, according to a research firm. Andrew Thurman, content lead for Nansen, told CNN that at its peak, Binance saw as high as $3 billion in net outflows over a 24-hour period, and that is a staggering number. A report about an ongoing investigation by the U.S. Justice Department into the exchange was a factor in investors' nervousness. Now, and it makes perfect sense, because when people start to get nervous, and I said this would happen following the FTX blow-up, is that people would start to get nervous, and that any bad news tied to their bank or where their money was held would cause them to pull it out quickly. Because when you start hearing about friends and family or other people that are losing their entire life savings, and you've got your money tied up, any sign that things are going wrong, well, people are going to pull it. And by the way, I want to mention we have a sponsor for today's show, and I'm going to give you 7 reasons why I'm going to buy this stock and why you may want to as well. Stay tuned to the end of the show. Concurrently, a large market maker, Jump, was found to have withdrawn huge sums from Binance with no deposits over the past few weeks. Ultimately seems to have caused jitters among both retail and institutional users. In short, it's a lot of money headed out, and that spooks some folks. Jump Crypto is part of Jump Trading Group, a quantitative trading firm. And so it starts to beg the question is, well, what does Jump know that other people don't? Are they just simply repositioning their money from one exchange to another because maybe there's a better deal or there's some other terms that they like? Or is it something that they know about Binance that's got them scared and they want to get their money out before everyone finds out what they know? And that's, again, how this starts to snowball, is people start to ask questions and say, hey, we saw what happened to FTX. I kind of ignored that. That got wiped out. I've got my money here. People are running for the doors. Well, I better too. If you get hurt by one bank, you're going to think all the other banks are bad, according to founder Zhao. The fact is, just because one bank is bad doesn't mean all the other banks are bad. And no, it doesn't mean that at all. But going back to the great financial crisis, what did we find? That all the banks were somehow engaged in some of these similar transactions, or were cross-insuring each other, or were just in the middle of this thing unknowingly. And next thing you know, as risk spread, contagion spread, and the whole system went down until the Fed had to come in and bail it out. So if you look here, the question people are going to ask is, what level is Binance involved in some similar activities to FTX, or was it involved in some other fashion, or is it doing something even different that we haven't seen yet? And perhaps, well, maybe they were. But Binance's business is also under scrutiny after FTX's spectacular implosion. On Monday, Reuters reported citing unidentified sources that U.S. prosecutors were considering wrapping up a money laundering investigation into Binance by filing criminal charges against individual executives, including founder Changpeng Zhao. So now the question will become is depositors' money somehow involved in this money laundering scheme? If charges are filed, will the government tie up all these accounts until the investigation is done? Who knows? And again, this is getting people worried that perhaps there's even more rot under the surface, which is, again, just the same thing that happened with FTX. Speaking of FTX, on Tuesday, Bankman-Fried was indicted by the United States on 8 criminal charges, including wire fraud and conspiracy. Separately, U.S. markets regulators also charged Bankman-Fried with defrauding investors and customers. And one thing I think a lot of people don't understand of what he was up to, and I covered this on the show previously, and I want to mention again, what he did was effectively offer depositors something too good to be true. You park your crypto here, I'll pay you a really large interest rate on it, to the point where not only will you never move it, but you'll put more money in. And then he borrowed against those deposits and traded them in the hopes that he would outperform what he owed depositors. If he did, then he makes the spread. And he thought he was infallible, that this was a sure deal. Well, of course, as we know, crypto prices fell. He wasn't, and it turned out he wasn't using his money. He was using everyone else's money, and now it's got people nervous again of what's going on with Binance, what's going on with their money. Also known as FBF, a crypto celebrity, he said his company suffered a liquidity crisis, of course, because he ran out of customer money and filed for bankruptcy last month, leaving at least 1 million depositors unable to access their funds, putting in question those at Binance wondering if their money is good. And now we find out that Binance halts withdrawals of major USDC stablecoin, adding to the story. And here we see Binance, the world's biggest crypto exchange, said it had temporarily paused withdrawals on the major stablecoin USDC. And of course, the founder, CZ, notes that we have seen an increase in withdrawals. However, the channel to swap from PAX BSUD to USDC requires going through a bank in New York in US dollars. The banks are not open for another few hours, and we expect the situation to be restored when the banks open. And sure enough, the situation was restored. But think about this. Let's put this in perspective. Let's say you go down to the ATM and you get there, you put your card in, you say, I want to get some money out, and a sign pops up on the screen and says, oh, by the way, we're out of money, but hang tight. As soon as the truck with money gets here, well, we'll be able to give your money after we reload the machine. It does not inspire confidence in a depositor. And again, it's things like this. Even though those withdrawals were temporary and they've been reinstated based on the information as of recording the show, it inspires absolutely no confidence in depositors that what if there are more freezes and they can't get their money. And sure enough, as we would expect, it's starting to put a lot of question into Binance's finances. As crypto's Binance seeks to reassure over reserves, says they're debt-free and that assets are fully backed. Binance Holdings founder CZ says outflows from the largest cryptocurrency exchange have stabilized, while warning employees that the industry's recovery from rival FTX's collapse will be bumpy, no doubt, to say the least. In a tweet on Wednesday, he said things seem to have stabilized and deposits are coming back in, and saw about $1.14 billion of net withdrawals on Tuesday. He said he has at least $60 billion in on-chain reserves, according from blockchain analytics firm Nansen. And of course, that was the claim of FTX, that everything was backed, everything was reserved, and now people are wondering, is the same thing true for Binance? And they should worry, they should be concerned. If you don't know who's backing your money, you should know, because if it turns out that nobody is and things go wrong, well, you're going to be on a long line of other people who lost everything. Responding to questions about the recent outflows and concerns about transparency, a Binance spokesperson said by email that people deposit and withdraw assets every day for a variety of different reasons. User assets at Binance are backed 1-to-1, and Binance's capital structure is debt-free. And last week, the exchange released Proof of Reserves report. The document, based on a snapshot review by accounting firm Mazars, showed the exchange having sufficient crypto assets to balance its platform liabilities. So here you see, hey, don't worry about us. Everything's okay. See, this other company says we're good. But hang tight. Let's dig a little deeper. And what do we see here? The report also acknowledged limitations, as it didn't amount to a full financial audit that would give a clear picture of Binance's overall health. And again, you can just see how this does not inspire confidence in depositors, because at this point, we heard from FTX. Again, don't worry, we got 1-to-1 reserves. Your money's good. It just happens to be not here because I borrowed against it and speculated with it. The question will come and will continue to be asked by people all over the world. Is my money good at these exchanges? What you will see is people will continue to pull them out. And if they continue to withdraw money, we'll find out if the exchanges are backed one-to-one, then nothing should go wrong other than their assets will go down. But as we saw with FTX, as people pull money out, you started to see problems. And of course, we do have to wonder what the Justice Department knows. What's going on with money laundering? Is there a case there? Are they about to file it? Because again, it just opens the door to more questions, more money gets withdrawn, and next thing you know, accounts get frozen. And now I'd like to talk to you about our sponsor for today's show, ClearMind. Let's take a look at what's going on with this stock, because I want to give you 7 reasons why I'm going to look at buying it tomorrow and why you may want to add it to your portfolio. Now, ClearMind is a psychedelic drug company. They're a revolutionary psychedelics for treating addiction and mental health. They're a brand new company. They just IPO'd in October. You can find them. They are NASDAQ listed. This is not an OTC company. CMND. Again, on the NASDAQ, CMND. And let's take a look at why you may want to add this to your portfolio. Here's the 7 reasons. One is they have an extremely low float. Now, what that means is there's not a lot of shares traded. They have currently 1.2 million shares available in this public float. And as you might know, low float stocks have the potential to prevent significant price swings if active market participants take notice. Now, you might remember from all these meme stocks that they didn't have a lot of shares floating because there was a lot of companies short the stock. Now, that isn't the case here in ClearMind where things are short, but the same notion is that a number of people started piling into those stocks and it sent the share price absolutely vertical. So when you see a company that has very low float, and if it gets some attention, whether in the case of ClearMind, perhaps its clinical trials start to look good, perhaps it gets some interest from institutional money, or perhaps there's people that say, hey, the stock is really low, there's not a lot of float, I want to get in early. Next thing you know, it can squeeze a whole lot higher. The next reason is pre-institutional buying. According to FinViz, ClearMind Medicine has 0% institutional ownership as of this month. And it could be because many brokerage firms and mutual funds shy away from stocks trading below $5 a share. And therefore, these institutions will inherently wait until a specific stock is trading above the $5 level if they wish to participate. And again, so what we see is ClearMind IPO, and we'll look at a chart here in a moment, at $6. Is currently trading. It then fell down to $3. It's trading a bit above that now. But if it gets back above $5, we could see institutional money come in. And with such a small float, it could be a huge boom to their stock price. And they have new uplisting exposure. They were recently listed on the NASDAQ, and as I mentioned, this could be a severely undervalued company heading into 2023 with a market cap of less than $9 million and a share price. Remember, I said it IPO'd around at $6, is trading in the $3 to $4 range here recently, offering investors some considerable upside. And here you can see their chart. And again, they're a brand new company IPOing in October. So here you can see they IPO'd at $6, and the price of the share went down, and I've been watching it as we get ready for this promotion, and we see that it's been sitting right around $3, and then the day before yesterday, it gapped up in the morning and actually went from just about $3 to $4. That's over a 30% return in one day before sellers came in. Today, it gapped up and saw sellers again. So there's 2 opportunities here that I want you to consider. One could be an initial move higher, just a short-term trade, and then perhaps a longer-term trade going out even further as their clinical trials start and get up to speed. And so I'm looking at tomorrow. I'll probably wait for the initial move to go through and then add to my portfolio, perhaps late morning or into the afternoon trading. If we continue to see what we've seen where it gaps up and then sells down, then over the next few days could offer quite a sizable return in a short period of time. So if we look at the upside potentials coming off this 52-week low, obviously it's all-time low, and it could offer, if it just gets back to its high, a potential of around 100% return, which was around $6.10. Another reason to look at this is a rising tide lifts all ships. And here we see the ETF IBB, which is a biotech ETF. And I want you to notice this broad bottoming pattern here. You have a left shoulder, a head, a right shoulder, a neckline right across the middle here. So if you get a break to the upside on biotech, well, Clearmind is a biotech stock. And so what you might find is managers, investors look for undervalued stocks that Clearmind would be one of those potentially where they jump in and push it higher as all biotech companies start to rally. An economic catalyst, they currently have 18 patents granted and 15 applications for patents pending, could be an economic catalyst to pharmaceutical companies who push research into new and beneficial drugs on the premise that they will be able to reap rewards from the way of profits on those patents. They're also an untapped market as Clearmind focuses on the huge untapped market with yearly economic impact, which we'll get into momentarily, costing the U.S. a whopping $249 billion. They're also getting ready to launch their upcoming first phase 1 clinical trial, which could offer tremendous upside potential when positive news is announced from the various phases. And I want you to also keep in mind that because Clearmind is traded on the NASDAQ, we talk about on the show these algorithms that read news stories and trade stocks and jump in. Well, on the OTC market, the algorithms don't read those news. They don't trade those flows, but they do on the NASDAQ. And so that's what's great about Clearmind. It is actually a NASDAQ traded security. So if some positive news come out, we could see the algos hit their stock. And again, we come back to that really low float, could drive the share price up really quickly. And as a reminder, the symbol is CMND. Now let's take a look at what Clearmind is doing. They are a pharmaceutical company approaching clinical stage, again, phase 1, developing innovative psychedelic-based medicines to solve widespread health problems. Their goal is to develop and provide new type of treatments for unmet needs and lack of innovation in the field of mental health issues, which is a huge problem in the U.S., such as alcohol use disorder, binge drinking, and cocaine addiction. They see psychedelic therapies, which previously may have been overlooked or underused, as a future treatment for a variety of indications. We believe our solution for AUD can help solve one of the world's biggest health problems. And they're going to do that through the use of psychoactive molecule, exerting a euphoric alcohol-like experience and a reduced desire to consume alcoholic beverages. It shows a good safety profile in preclinical studies with the potential to change the lives of millions who struggle to drink in moderation. The solution to them is MEAI. And if they did have a successful preclinical trial, you can read that on their website. In the MEI treatment for alcohol consumption, they did the test on a group of mice and now are getting ready to move into phase 1 of their clinical trials. That will soon start. And of course, as we note, that if any big news comes out of this, the share price could go straight up. And just as a reminder, their website is Clearmind Pharmaceutical. You can check them out. NASDAQ symbol CMND. I'll put both in the description below so you can check them out. And as a reminder, I'll be taking a position in them probably tomorrow. I'll probably wait till after the initial move, but I will most likely make that trade tomorrow. And I'll add that to my portfolio with the other ones that we've talked about on the show. So I hope you take a look at it. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.